Michael in this video, Friday 7th of December 2012. Hope you're having a good week's trading. Just want to record a video about Forex because we got potentially the next trend leg kind of setting up with yesterday's activity, so just wanted to talk about that. I kind of like Forex more and more these days just because I'm really interested in the international flows of capital, and all of those kind of get picked up in the different foreign exchange rates. You can see where the money's flowing into which particular kind of investment assets and where the hot money is kind of going. So Forex I kind of like more and more on a longer term time frame. And what I find interesting is you can set up these kind of charts as a whole group and kind of look at them all in sync, and I do this with my risk on charts as just an example here. So on TradeStation I set up 6 charts on the risk on charts, similar number for the risk off charts, and when you look at them kind of all together you can start to see kind of patterns emerging. And in terms of the risk on charts, I'm looking at something like crude oil and copper, and those are kind of representative of global growth. When we got kind of high manufacturing growth and so on, those kind of both go up. And then in terms of currency pairs, looking at the euro and the Aussie dollar, because they kind of are high beta currencies and they kind of tend to move when there's kind of growth in global kind of GDP. And then lastly, gold and silver, again those kind of go up when money's flowing out of the States into kind of high growth opportunities around the world, and the US dollar kind of sells off, and so gold and silver kind of go up. So I kind of look at these as a group of kind of risk on, and I find that kind of useful. You can do the same thing with currencies, kind of looking at all the currencies versus the US dollar and seeing what they're doing, because they kind of fire off in different at different times, and then they start to all kind of move together. And we had one of those kind of moves yesterday where I think we're setting up for the next kind of trend leg. So let me just show you that. This is on the dollar index. So this is at DX, the continuous contract on TradeStation for the dollar index, and I've been pretty bullish on the dollar index for probably about the last almost 2 years now, and it's lately, over the last 6 months or so, it did take a little bit of a tumble. We got up to kind of 83, 84 here on the dollar index, and then we kind of fell off back into the 70s. Wasn't as low as we kind of reached before, down at this kind of 75 type level, that we really kind of bounced on about 78.5 here. You can see, so on a daily chart here we've had this trend move that ends up with an exhaustion pattern on the left shoulder, pull back to end of trend here. It's actually a dirty end of trend because we just violated that pullback level there, but that's a dirty end of trend signal. We get bullish divergence and a flush pattern. And so we know that we're setting up for some kind of bottoming process here, potential change in trend. We go break above this resistance level on this daily chart, and that shows the strength of the market, where we're just kind of we're anxious to kind of get going. And the last couple of weeks we've just kind of sold off. But with yesterday's activity, what we've done, we've come into 2 kind of flush signals, so flushing out the last of the sellers kind of down here. We were waiting for a cyclical support area to come in, which got signaled yesterday, and we got a blue professional bar kind of taking off like a launch pad off here. Quite a strong move in dollar index, and I think this is the beginning of this kind of next kind of trend leg up in dollar index. So professionals kind of getting on board this move quickly. We had a bunch of the ECB announcements kind of came out yesterday talking about lack of growth in the Eurozone and so on, so a lot of professionals kind of getting on board this move. And we've been set up though with this kind of exhaustion pattern, flush patterns, pull back to end of trend, kind of flushing out the sellers again, triple bottom kind of down here at this kind of 79 type level, and now we kind of took off from there through 80 today at the moment. And just to refresh people's memory, this is one of the reasons why I'm bullish on dollar index kind of longer term. This is looking at the commitment of traders numbers down here on a monthly chart, and remember, commitment of traders numbers just comes out on a weekly basis, so you can look at it on weekly and monthly, and you can start to see kind of the bigger picture type here. And the reason I've been bullish over the last couple of years on dollar index is because we've had these bullish divergent signals kind of come in here on the commitment of traders numbers. Now this is using a kind of better momentum any kind of indicator. I flipped the numbers upside down for commitment of traders here. And what it shows me is kind of bullish and bearish divergence signals. So for example here, coming into this high, this in 2002, dollar index was up at 130, which is unbelievable reading. We had all these bearish divergence patterns. We kind of fell off here. Bearish divergence, this one was a little bit early, but there was a good divergence signal, some short ones here, and we've been trying to find this bottom kind of down here in order to turn. So at some point I'm looking for a kind of a big move back above 85 on dollar index, and just wondering if with yesterday's activity that could could just be the beginning of what's kind of going on. And then because all the currencies start to kind of move together, you can start to see these the patterns and inverse patterns happening in the other markets. So the largest constituent of the dollar index is the euro, and here's the euro daily chart. So the euro over the last couple of months, while we've had weakness in the dollar index, the euro's been trying to be relatively strong. We kind of topped out at 132 up here with exhaustion buying, pullback to end of trend, just been messing around up here. It's a triple top that we formed over the last while, and then with yesterday's activity there was that big kind of blue professional down bar kind of getting this move going. We're falling through the lows of that, so for me that's showing the professionals kind of selling down this move kind of anxiously, kind of getting going here. At this point here they're taking profits on the way up here, and then the market's kind of just moving around. You've got to look at these kind of professionals and amateur signals kind of in context. So what would be happening, because we couldn't get through 31s up here and they'd taken profits here. We've just been moving around in this range, and this is the time where they're kind of now kind of anxious to get on board a trend move, because 31s have been rejected at this point and kind of getting going on the flip side. Pounds, similar type pattern. Again, we kind of exhausted with exhaustion buying, bearish divergence, blue professional bars, exhausted up here. Didn't make a neat kind of pullback to end of trend. It was kind of dirty end of trend, but it showed how weak the market was there. And we've just had this weak kind of rally back up in the pound with a flush signal here, and again more blue professional bars on the way up, taking profits on the way down, getting on board this move, kind of selling it short, and the lows being broken of the pound kind of moving down. So we've got euro and the pound kind of moving down. The Aussie dollar has been one of the strongest currencies kind of out there over the last several years, just because it supplies all the raw materials into China. And we've had a lot of inward investment into the commodities kind of space in Australia. Now, although that's kind of tailed off kind of recently, the currency is not, and we're kind of underneath this 105 type level, and we're just hanging around here. There's just been no weakness in this currency, despite a whole bunch of kind of reports coming out saying at some point the Australian market is toast and will kind of reverse and go the other way, but the currency has just not been doing that. And in fact, a couple of days ago we actually had the Reserve Bank of Australia cut rates by 0.25%, and the currency went up. Normally the currency goes down when you got kind of rates being cut, but we had the reverse. So Aussie dollar is kind of the strongest kind of going on. After that, Canadian dollar, again, because it's got a similar business model to Australia, and hugely commodity based kind of economy, and the Canadian dollar has been extremely strong kind of lately. But we did have this kind of blow off pattern kind of earlier on in the year, exhaustion buying, blue professional up bars kind of up here at 103. This parity level again versus the Canadian dollar and the Aussie dollar versus parity is a key kind of constituent, and we have kind of come in lately to a cyclical resistance here, but it's taking its time. If it wants to kind of move down, it's being very sluggish about moving down. So again, pretty strong here. And then you start to get into the currencies that are heavily manipulated. So we've got the Swiss franc here, which the Swiss bank intervened strongly a couple of months ago and years ago. This was the Swiss central bank intervention, when all the money was flowing out of euros into the Swiss franc, into all those deposit accounts, and trying to get some safety haven. And the Swiss bank intervened and knocked this thing down in a couple of tranches like this, and said, no way, we're not going to do that. We're going to follow the euro as much as possible. So they'll be intervening in their markets as the euro kind of goes down. They'll be trying to follow suit, and that's what we had over the last several days. So we had the strength in the Swiss franc, pullback to end of trend, and then with this move here, we're breaking towards the lows of that, and this blue professional down bar breaking the lows of that. So that'll be kind of the market trying to force the Swiss franc down. I mean, the participants in the market know what the Swiss central bank's going to do, because they've telegraphed that well. So they're just getting on top of this and kind of following it as the euro kind of follows down. So, and lastly, Japanese yen. I mean, I don't understand the Japanese yen at all, how it flows. It seems to sometimes flow with the risk-on markets, and then sometimes flow with the risk-off. It's certainly a currency heavily involved in the carry trade, and so you'd have thought it's more like the US dollar from that perspective. But anyway, last several months, we've had severe weakness in the Japanese yen versus the US dollar, and so we're kind of in a downtrend here. We're below cyclical support at this point here. We had this huge kind of leg up here, exhausted all of those buyers, and bang, we've been down again. So we're kind of rushing to get out of this thing. People are selling this thing down. So we're in a downtrend. It's got to go pull back to end of trend on a daily chart before this is over. So there's the Japanese yen. But as I said, you can line these things up all on one chart and kind of look at them in sync and see them start to move together. And the neat thing about the dollar index is you can use that as to look at all the markets together. And I think yesterday's activity was absolutely key. So I'm going to be looking at that as a potential launch point for this next trend leg in the currency markets. Anyway, I hope your trading's going well. Looking forward to the weekend.